Rivian just shocked the market. A stock that was getting ignored suddenly exploded more than 20% in a single session. And the reason is now what most people think. This wasn't about profits. Rivian is still losing billions, but the market didn't care because the story changed overnight. Let me explain. Going into earnings, expectations were low. Investors were worried about EV demand slowing, high interest rates, and Rivian burning cash. Most people expected another weak report. Instead, Rivian delivered a smaller loss than Wall Street predicted and revenue that came in higher than expected. Now pay attention to this. In growth stocks, beating expectations matters more than making money. When expectations are low, even a small surprise can trigger a huge move. That's exactly what happened. Algorithms started buying, short sellers rushed to cover, retail traders jumped in, and the stock took off. But the real fuel behind this rally was not the past quarter, it was the future guidance. Rivian is now projecting a massive increase in vehicle deliveries over the next 2 years. We're talking about growth close to 50%. This surprised Wall Street because the narrative until now was that Rivian demand was slowing, especially for its expensive trucks and SUVs. So what changed? One word, R2. The R2 is Rivian's upcoming lower-priced SUV. This is the company's first real mass-market vehicle. Lower cost, simpler manufacturing, much bigger potential demand. Management says this single model could become the majority of their sales within a few years. That is a huge shift. Until now, Rivian was competing in the $70,000 EV category. That's a small market. The R2 moves them into a price range where actual volume exists. If they execute, this changes the entire business, and the market is already pricing that in. There was another important milestone that investors noticed. Rivian reported its first full year of positive gross profit. That doesn't mean the company is profitable overall. They are still losing money after expenses, but it does mean they are finally making money on each vehicle before overhead. That tells us costs are coming down. Production is getting more efficient. The business model is improving. For long-term investors, that's a critical signal. Analysts reacted quickly. Price targets went up. Ratings were upgraded, and sentiment flipped from bearish to cautiously optimistic. That matters because Rivian has been heavily shorted. When analysts turn positive, short sellers start closing positions. That buying pressure pushes the stock even higher. But here's the part many retail investors are missing. Rivian is still guiding for billions in losses going forward. They will spend billions on factories, tooling, and scaling the R2. This is still a high-risk, high-burn company. So why did the stock go up? Because the market looks forward, not backward. Investors are betting on 4 things: the R2 launch, higher deliveries, better margins, and a long-term path to profitability. As long as that story stays intact, the stock can hold momentum. Another key factor is cash. Rivian still has billions of dollars in liquidity. That reduces the risk of near-term dilution or bankruptcy. In growth investing, survival time equals opportunity. Here's what could happen next. If Rivian continues to beat expectations and shows real progress on R2 production, the stock could build a sustained uptrend. But if there are delays, cost overruns, or weak demand, this rally could fade very quickly. EV stocks are story-driven, and stories can change fast. For retail investors, this move teaches 3 big lessons. Number 1, low expectations create explosive upside when companies surprise. Number 2, future guidance moves stocks more than past results. Number 3, narrative drives price action in growth names. Rivian did not become profitable, but it did something just as powerful. It changed the narrative. And in the stock market, narrative is momentum. So now the big question is this: is Rivian at the start of a real turnaround powered by the R2, or is this just another temporary spike in a cash-burning EV company? Here's what could happen next. The next few quarters will be all about execution, production updates, cost reductions, and real demand signals for the R2. If those come in strong, this could be the beginning of a multi-year recovery story. If not, the market will punish the stock just as fast as it rewarded it. So what do you think? Are you buying Rivian after this earnings surge, or staying on the sidelines waiting for real profitability?